We have now been operating Lark Funding for almost 2 years. June 1st will be our 2-year anniversary. Yes, we'll probably be doing something special, but that is a video for a different day. The topic that I want to talk about today is, after almost 2 years of operating, who is the best trader that we have ever worked with? We haven't done many trader interviews on the channel, but I'd still like to share some of the inside stats, because when I was funded with FTMO back in 2021, 2022, I always loved learning from the best traders out there, and there was one trader at Lark that stands out from the rest. By far, it has been the best trader that we have ever worked with. We're talking about a trader who has passed multiple challenges, has received many payouts, and has earned a ton of money, has actually earned more than the average salary in the US in the last 12 months with us, actually in just the last few months with us. And so in today's video, we're going to break down some insider stats from this trader and what it means for you, what you can learn from this trader, not just to get motivation, but to actually leave this video a better trader than you are right now. Okay, so there are a lot of famous people named Joe. You have Joe Biden, Joel Osteen, but then we also have Joe Lark. No, his last name is not Lark, but he is a big deal in the Lark community, so we're just going to call him Joe Lark. Mr. Joe in this video. He is the most successful Lark trader of all time, and he just received his 4th payout with us, or it actually might be the 5th payout with us. I should have confirmed that, but it's the 4th or 5th payout with us, and this one for $10,260. His average payout with us is over $10,000, which means, yes, Joe, Mr. Joe, is the most successful trader that we've ever worked with, having received over $50,000 in payouts. Now, before we break down some of his larger stats, I'd like to break down stats specifically on this account. How did Joe go on to receive a $10,000 payout in just a few weeks? So looking at the numbers that I have here, it says a lot of things that we're going to need to break down, but let's go one by one. His average win was $760.46. This is not a bad average win, considering his account was on a $200,000 account. That suggests that Joe is being pretty risk managed, not risking too much. His average win is less than 1%, about 0.75% is his average win. His average loss, however, is $2,420, which means that his losses are more than double his average win. Now, we're going to have to talk about that, because it does have a benefit, but it also does have a downside. That means Joe's average risk to reward ratio is 0.31, which is not very high. But that comes with something else. If you have been in this game long enough, you know that a low risk to reward ratio is going to bring you something else, something that traders love, something that helps a trader's psychology tremendously. That is your average win rate. That's right. The lower risk to reward ratio that you have, the higher your win rate is going to be. We're going to talk about that shortly. Active trading days. How many days did Joe trade this account in order to make $10,000 to go on to receive his payout? Well, Joe traded this account 14 days. He took a total of 80 trades. So within 14 days, he took 80 trades. So definitely taking a lot of positions there. In terms of what he traded, is he trading Forex? Is he trading commodities, Bitcoin? Well, he is trading Bitcoin and the NASDAQ. That's it. That's all he traded. I believe on this account, he did take a trade on oil, but it was just one. It looked like an outlier. The vast majority, 99% of the trades, were on Bitcoin and the NASDAQ. Now, to kind of look at that for a second, I think that's interesting. We've seen a lot of traders do very well trading Forex, trading commodities, trading all types of things. There's definitely enough evidence out there that you can be a successful trader regardless of the instrument that you are trading. But with Joe being the best trader that we've ever worked with, the NASDAQ and Bitcoin are definitely much more volatile than you would see, very common or the most popular FX pairs, such as Euro-US. Euro-US is not going to be as volatile as Bitcoin. It's not going to be as volatile or move as much as the NASDAQ. The NASDAQ is going to move more than the S&P or the Dow Jones or something along those lines. So volatility, taking advantage of volatility, is something that traders need to do. And clearly, Joe is positioning himself to trade an asset that is more volatile so he can take advantage of those movements. Okay, so we have an average risk reward of 0.31, 14 trading days, 80 trades, but it's really that risk to reward, 0.31, less than 1-to-1. His average loss is more than double his average win. That is what I want to talk about here. When I was a trader, I wanted to win every single trade. If you're watching this, you too, you probably want to win every single trade. And I wanted those wins to be huge. Now, I had a mentor way back in the day. He lived in Toronto. I visited him once. He was very, very helpful to me. And he always said, that there was an inverse correlation between your risk reward and your win rate. Meaning that if you have a very high risk reward, meaning your average win is 5 times higher than your average loss, you're going to have a very low win rate. You're going to win 10% of your trades, 20%, 5% of your trade. Whereas conversely, let's say your average risk reward is very low, like 0.3. What are you going to get out of that? Well, you're going to get a very, very high win rate. Your wins are going to be low, but you're going to win a ton. Now, for me, I didn't understand this. I wanted huge wins, and I wanted to win them all the time. I couldn't wrap my head around it, but unfortunately, it is just basic math. It is how the game goes. And so this was probably one of, if not, the best pillar that I could pull on in terms of understanding and playing with my trading metrics to best align with me. Now, I think traders love to have huge wins. I loved having huge wins. But the downside of that is that you're going to lose a ton of trades. Now, on paper, this is totally fine. There's nothing wrong with losing trades. If you have a 5-to-1 risk to reward and you're risking less than 1% a trade, you'd have to actually run the numbers, but I'm pretty sure that you could lose 15, 20 trades in a row without having a risk of ruin. You could make it back as long as you stick with your strategy. Problem is, most traders, myself included, after 2 losses, 3 losses, 4 losses, 5 losses in a row, things start to get a little dicey. The trading psychology, it gets a little shaken up. Things at home, get a little stressful. Things get difficult after some consecutive wins, and you start to think, maybe my trading strategy sucks. Maybe I suck. Maybe I need to do something. Maybe trading's not for me. It is very rare for a trader to be able to work through those losses, those consecutive losses. It's a very rare breed for somebody to take 8 losses in a row and say, it's just part of the game. It's just part of trade. I'm not going to change anything. I'm just going to keep going. If that's you, fantastic, phenomenal. But the average person is not like that. So understanding the inverse correlation between your win rate and your risk to reward, we can now use that to our advantage. So what I did personally was I said, okay, I don't do very well when I have a lot of consecutive losses. So what I want to do is I want to win as many trades as possible, and I'm okay with those wins being small. So I aimed for a minimum 1-to-1 risk to reward. If I risked 30 pips, it was for a minimum win of 30 pips. So if I risked 1%, it was to make 1%. If I risked 0.5%, it was to make 0.5%. And that dramatically improved my trading because I understood this correlation, and I was just better able to bend my trading metrics in my favor. So by doing that, I'd have to go back to my old trading metrics, but I think my win rate increased to about, it wasn't quite 70%. I had a few strings where it was 70%, but it was closer to 65% with that 1-to-1 risk to reward ratio. And that's exactly what I used to pass all my FTMO challenges, to trade full time without any other source of income for 2 years. And it was really because of this, because I was able to use this to my advantage. And so the takeaways from this: 1, Mr. Joe Lark is a fantastic trader, the best trader we have ever worked with. And he goes against the dynamic that we see on social media of traders saying, oh, I have a 90% win rate, I have these huge wins. He goes against that, and yet he is the best trader that we have ever worked with. Second takeaway, that there's an inverse correlation between our win rate and our risk to reward ratio, and we need to use that to our advantage. If you are psychologically stoic, if you are a stoic trader and you can deal with consecutive losses and not make any changes, more power to you. You can now go through that and have your wins be very large. But if you are more of an, I don't want to say an average, but if you just are a human and you succumb to human nature, then aiming for a lower risk to reward of maybe lowering that slightly to increase your win rate, I think that could be a major benefit to you, because it was to me, and it dramatically improved my trading. That's the video for today. Let me know if you have any questions. We're building the #1 email newsletter for traders. We have over 20,000 subscribers. Mondays, Wednesdays, and Fridays, we're delivering you the best updates about the prop firm industry, insider stats on how to get funded. This video was from one of the emails that we sent out, so you can subscribe to that below. See you in the next one. Till then, peace.